Friday, October 19th, 2018. This has been an oddly quiet financial week. I mean, the stock market's all over the place, but that's perfectly normal. There isn't any real change in interest rates. There isn't any change in much of anything except, as the copy near this video describes, there are a whole bunch of changes in process that are new. And I don't pretend to know what the outcomes will be, but we can identify the changes themselves. Most of them are overseas. The ones that are in play here, the Fed is the first one, and it's terribly misunderstood. Markets, politicians, all kinds of people think that the Fed has entered a death march of some kind and is simply going to tighten it, tighten it, tighten it, tighten it. No, it's not. The Fed's objective is to slow U.S. economic growth about in half. We are growing unsustainably fast. Wages and inflation are still in the box. If they get out of the box, we have no method to get inflation back under control except to throw several million people out of work. So it's a hell of a lot better to plan to raise rates until the economy slows down or slows down by itself, rather than run the risk of creating a real recession to deal with an inflation problem. But the Fed's future actions are not baked into the cake. Powell, the new chairman, is wonderful. He speaks English. And he's made it very clear that he and the Fed are not going to rely on elaborate models and econometric models. They're going to watch the economy in real time, and we'll know when they're going to stop hiking as soon as they know. It's as soon as the economy slows down. Another little change here, we're going to have an election in 18 days. It's a little change because nobody knows how it's going to go or what its consequences will be. The biggest single financial matter in the country is a deficit that's again out of control, but nothing's new. 40 years ago, both political parties began to blame each other. You cut taxes too much and you want to spend too much, and yet every few years we have reached a remarkably balanced agreement on raising revenue and cutting expenditures or limiting expenditures. Fortunately, we have the outside world, and beginning with Europe. During this week, preoccupied by all kinds of things, the signature of trouble in Europe is the sudden increase in interest rates on sovereign debt, which is an indication that somebody has behaved not like a German. And in this case it's Italy. And Italy's too big to save, it's too big to bail out, and Italy has had it with German austerity. The yield on an Italian 10-year bond since the last big European crisis 8 years ago had been very close to 2%. All of a sudden it's 3.55 and rising. And it's not clear what to do about it. Related changes. Merkel is at the end. She's at her political end inside Germany. And maybe some personal fatigue, but she and her coalition, her basic political support is a set of political parties that date all the way back to the 1950s, and they've begun to lose elections, and lose them big. And German politics are fragmenting, although Germany seems to deal with that fairly well, but Merkel has been the immovable, one might say blockheaded, but absolutely immovable support for one Europe, fundamentally under German orders. And as Merkel's power weakens in Europe, it's not at all clear how an Italian crisis will be contained. The other party in Europe who has presided over fixes has been Mario Draghi, who is the head of the European Central Bank. His term ends next year. There is not a sign yet that the Europeans can agree on who will replace him. And it's not at all clear what the ECB could do to head off an Italian crisis. The new Italian government, they come and go with some frequency, but the new Italian government is insistent about increasing government spending to ease economic burdens, and we don't know when, we don't know how, but the Eurozone is in trouble. Brexit is not any direct economic trouble yet, although the Europeans' insistence that they be involved in the movement of goods and people across the border back and forth between the Republic of Ireland and Northern Ireland, that's been the bloodiest place in Europe outside the Balkans in the last 75 years. And to have Brussels decide that it's going to be involved is an indication of how much trouble the whole One Europe scheme is. Then there's Asia. China's very hard to watch because it's illegal in China to disagree with the government in any way, and the government can't be trusted. But every once in a while, little pieces of data leak out. Sales of automobiles in China, as of September, had fallen 11% from a year before. That's a lot. Things are not well in China. China has embarked simultaneously on an effort to grow the economy, but not to use debt to grow it, and in fact to constrict and unravel the supply of debt previously used. And if that economy is slowing, it's not clear how they revive it. It's also not clear the role of U.S. tariffs, but China's slowing. It's slowing at a rate and to a degree that it has not in a generation. Japan is just Japan. Japan is in the process of making another effort to let interest rates float to market levels and to end Bank of Japan stimulus, and that's going to end the same way the last tries have. They'll go into another recession of unknown depth and length. Now, lest any of this seem grim, every single one of those changes underway leads to modestly slower global economic growth. The International Monetary Fund came to that conclusion this week also. That makes the Fed's job easier. It means there's less inflation pressure and growth pressure elsewhere in the world. And I know in conclusion that I'm going to hear from somebody about this Saudi business. I try to just shake it off. Saudi Arabia, at the end of World War II, when oil money began to flood into the kingdom, had a population of 2.5 million. It's now 33.5 million. There's no nomadic society can grow social capital fast enough to keep up with that population change. Saudi Arabia has never developed a non-oil economy, non-oil employment, non-oil budget for the kingdom. And if you scout around, of all the places in the world, Saudi Arabia is more likely to have a revolution than about anything I could think of. So still, don't worry about it. Whoever it is in charge in Saudi Arabia and all of the other Gulf states, they all have to sell the oil. No matter who they are, they have to sell the oil. So we're not likely to go into an oil shock, and whatever happens in the Middle East, anybody who's been able to predict the place, well, there isn't anybody who's been able to predict the place. But the bottom line of all of that change that's underway overseas, I say again, is probably to make the Fed's job easier. And so here we sit, of all nations, more easily dealing with change than any other. It brings chaos, it brings political discord, it brings economic dislocation, but we of all nations are better equipped to deal with change than anybody else. Do have a good weekend. Go Buffaloes!